Welcome back. Well, as promised, let's get straight to the top stocks that we're tracking for you today. Our research team joins in. And Sonia, you go first. Reliance Industries, how are the numbers?
Well, the earnings were much better than what the street was estimating, so I'm going with green over there. It was a stellar growth in the retail segment, so that was the star of the show this time around. Double-digit top-line growth. The revenue growth came in at about 10.5%. The margins have been quite steady for the retail business, and the expansion plan continues there. Even in the telecom business, the growth was quite steady. The average revenue per user went up 2.5% year-on-year. But I think the key takeaway from the telecom business was the increase in subscriber additions. They were much stronger than expected. Subscriber addition from Jio was at an industry-leading 11.1 million subscribers during Q2. So, the core numbers, of course, were quite strong, but a lot of brokerages have come out with positive commentary on the numbers. Jefferies has a buy with a target price of 3,000 rupees. They also talk about how the risk reward is now favorable for Reliance Industries, given that the stock is down 20% from its 52-week high. And they say that the retail segment improvement is something that is the star of the show this time around. And Nomura has a buy with a target price of 2,925. They see a healthy growth across all segments. The other thing which I really liked is the fact that the debt of the company has come down. It's moderated by 5,200 crores in this quarter. It's still at a little over 3 lakh crores, but the debt has come down and the capex is being done using internal accruals. A lot of positives, but standard disclaimer, Reliance Industries is the owner of the channel that you're watching.
Okay, and in a short while from now, we'll be joined by Prabal Sen of ICICI Securities. He'll be joining in to give us his view on those numbers, so you stay tuned for that conversation. Let's focus on the next stock, UltraTech Cement. That's the big boy in there. They had hinted post their Q2 numbers that they'll be announcing the third phase of expansion. That's precisely what they've done. So phase 3 has been announced. They're talking about 22 million tons approximately. It's going to be done in a phased manner, and it gets commissioned from FY26 onwards. The total investment they'll be making is around 13,000 crores, and almost all of it will be funded via internal accrual. So no pressure on the balance sheet, and yet they're going to be increasing capacity by 22 million tons. Rough calculations, how much does it work to on an EV per ton basis? Around $72. That's a sharp discount in comparison to replacement costs, which is more than $100 per ton. So that's good. And bulk of this incremental capacity that we're going to be seeing from around that 135 to around that 180 that they're talking about, bulk of that is going to be in South as well as East India. Remember, they've already announced the capacity, the phase 2 capacity. So post that, the capacity goes to around 160 million tons. And post this capacity that they've announced, that's phase 3, it moves to around 182 million tons. And the promoter entity, they have stated in their release, they target around 200 million tons. They also go on to make this point that the bulk of the focus is on green energy, on renewable energy as well. So they're not investing in thermal capacities. The positive would be consolidation with regard to the big boys. UltraTech Cement, reigns supreme in the cement space. So that's good news. The negative could be that maybe, in fact, capacity utilization levels will hover around 70% odd, which sometimes causes a bit of a problem with regard to profitability. But I'll read this news positively and expect the stock to open up in the green. But let's get back to numbers. Sonal joins us to tell us about BPCL. Sonal?
Good morning, Nigel. Well, BPCL's numbers, they were better than estimated. But yes, it was a decline on a quarter-on-quarter basis. If you talk about the revenues, they were down 9%. EBITDA was down 18%. Margins at 12.5%. But it was better than the single-digit margins which our CNBC-TV18 poll suggested as well. Profits were down 19% as well. This beat on margins, it was driven by GRMs, which came in at $18.5 per barrel versus estimates, Kotak estimates of around $16.5 per barrel. The balance sheet improved as well. So there, the debt to equity decreased to 0.32 times versus 0.45 times. This is in the 6 months of FY24 versus the last year. However, going forward, very important to look at all the oil marketing companies because of the election year. Jefferies says that earnings could see material deterioration in second half because of near-term pressure on refining margins and also marketing losses on diesel because they've not increased prices despite increase in crude oil prices. Despite elevated oil prices, an election-heavy calendar precludes possibility of retail fuel price hikes, and that will continue to pressurize these companies. So that's the reason why the stock could see some red despite the positive numbers that we saw.
All right, Sonal, thanks very much for that. Well, let's stick with the old economy. NTPC is the next one which reported. Vivek has got details on this one. Vivek, hi, good morning.
Well, good morning. That's right. So NTPC, reported a steady operational performance. This particular quarter, the top line was expected to be muted because on the back of the fact that in Q1, due to heightened demand, the company was unable to take down some of the planned shutdown and maintenance activities. So a lot of them was bunched up into Q2. So this led to lower, plant availability factor as well. So plant availability factor was at 90% versus 94% on a year-on-year basis. And on the back of this, you also saw higher fixed costs under recovery. Now, talking about the numbers themselves, largely in line with what the street was anticipating. Revenues, flattish on a year-on-year basis. EBITDA up 15.5%, aided by, softer commodity costs. So margins coming in at 25.7%. Profitability up 16.5% on a year-on-year basis. The management didn't hold a con call, over the weekend, and some good news coming in terms of, the kind of capacity addition. So, some aggressive capacity addition targets coming in there. The company is now expecting to add 15 gigawatts of renewable energy capacity by FY26 versus, just 3 gigawatts that they have currently. Along with that, the thermal capex, that the company has planned is now at 11.2 gigawatt versus 7 gigawatt earlier, and this is going to be done over the next 18 months. So, some positive news flow coming in for capital goods companies as well.
Okay, thanks a lot for that. Well, Cipla will definitely be in focus. The company has raised their margin guidance, so the street will definitely like that. Ekta has been tracking that for us. Also, Dr. Reddy is on her radar. Ekta, hi, good morning.
Morning. Well, yes, I'll start with Cipla. The company has increased its EBITDA margin guidance to 23-24% with a higher end bias from 23%. US sales are also expected to be within this range of $220 to $225 million per quarter. This is on the back of key drugs such as albuterol and not really Revlimid generic and other products. So the company has raised its EBITDA margin guidance. Base business in the US business is expected to be $220 to $225 million going forward. The company is going to be focusing on optimum capital allocation. They really can't talk about any kind of M&A plans that the promoter has. And they plan to launch semaglutide, which is basically that big weight loss drug which is making waves all over the world, in India in the oral form, as well as they may explore injectable forms as well. So maybe that could be a trigger going forward and gives you a sense in terms of the kind of opportunities they have. Separately, Dr. Reddy's, the numbers were okay. They were aided by a lot of other incomes this quarter. Revenue was up 9%, margins 32%, profit 1480 crores. Other operating income included benefits on account of a product-related litigation, etc. US sales did better than estimates. But India was up 3% year-on-year, so that was a little bit of a dampener. And the Bachupalli facility in Hyderabad has been issued 10 observations by the US FDA. So that's probably going to weigh on the numbers today. Numbers okay, but the 10 observations likely to pull way down.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Abhishek. He's here to tell us about SBI cards. Abhishek?
A weak set of numbers coming in from SBI card. The credit cost continues to remain elevated for 19th quarter in a row. So it was at 6.7% when compared to 6.8% on a sequential basis and about 5.5% on a YY basis. The net interest margin is the lowest ever for the company as revolver rate continues to remain at the lower end of 24%. Net interest margin is at 11.3% when compared to 11.5% in the previous quarter. There was slight hiccup in the asset quality as well. Gross NPA ratio has inched up by 2 basis points. The net income was at 3,616 crore. Motilal Oswal estimate was 3,680 crore, and they came up with a PAT of 603 crore versus Motilal estimate of 650 crores. So overall weak set of numbers coming in from SBI card. Back to you.
Okay, Abhishek, thanks very much for that. MGL is the next one we're going to focus on. And I mean, results apart, there have been so much news flow recently, but a focus on the earnings for the second quarter. Sonal is here. Sonal.
Well, Mahanagar's gas's numbers were slightly below estimates, but there's nothing to worry about because volumes, they were largely in line with what the street was working with. Revenues were up 2%, but EBITDA declined 8%. Margins also came in at 30.5%, which is a decline on a quarter-on-quarter basis. But profits also declined by 8%. As I said, their volumes have increased on a YOY and on a quarter-on-quarter basis to come in at 3.57 MMSCMD, which was driven by their higher CNG volumes, which were up both on a quarter-on-quarter and on a YOY basis. PNG volumes saw a slight decline on a quarter-on-quarter basis. But overall, it was a decent set. In fact, Citi has a buy rating on the stock with a target price of 1240 rupees a share. They say the first half EPS stands at 72 rupees a share, which creates room for a healthy dividend payout for this year. And they say that the numbers were better than what they were estimating, and they are bullish on the stock.
Okay, thanks a lot for that. Lots of stocks to digest, but don't worry, we will take it one by one with our experts as well in a bit. We also have M&M Finance, well-tracked stocks. Abhishek is here to tell us how the numbers look this time. Abhishek, over to you.
Well, Sonia, the numbers were weak, especially on the P&L front. The net interest income came in at 1,645 crore. We were working with a poll of 1,691 crore. PAT came in at 235 crore, and we were working with a number of 463 crores. So for second quarter in a row, the PAT has actually missed the earning estimate by a big margin. Gross NPA has inched up in absolute value by 6.7%. In terms of ratio, gross NPA ratio is at 4.3% versus 4.35% in the previous quarter. Net interest margin, now they give it on a cumulative basis. So for H1, it was a 6.5%, which if you take a look at the historical average, 9-quarter low in terms of net interest margin that they have given. AUM growth is at 20.5% YOY and about 5.5% sequentially. This is largely led by the tenure factor, which has contributed as disbursal to AUM ratio, which I calculate is at 41% versus 23% in the previous quarter. Back to you.
Okay, all right, Abhishek, thanks a lot for that. And we'll also be joined by the management later on in the show at around 9:40 a.m. So we'll hear out his thoughts on the past quarter and the way ahead. But Abhishek, coming back to you, AU Small Finance merger announced last night. Tell us more about that.
Well, there are two set of news on AU Small Finance. One, the result, and the other one is the acquisition. Results were weak given the fact that slippages in absolute value increased by 10% quarter-on-quarter. Asset quality deteriorated. Gross NPA ratio actually inched up by, to 1.91% versus 1.76% in the previous quarter. Net interest margin is at 10-quarter low of 5.5%. Net interest income grew by 15.3% YOY and about 0.2% sequentially. The other income actually drove the P&L this time around. Other income inched up by 35% quarter-on-quarter. Provisions were elevated. A provision came in at 114 crore, which is up 166% YOY and about 247% sequentially. So the PAT was at 402 crore, but this is largely driven by the other income. AU Small Finance Bank, on the other hand, also announced that they will be acquiring Fincare Small Finance Bank. AU will give about 579 shares of AU Small Finance Bank for every 2,000 shares that you have in Fincare. So this acquisition, if you take a look, the book addition will be about 16.3% to AU Small Finance on-balance sheet loan book. And AU will also get presence in the southern market where Fincare is there, like Andhra Pradesh, Telangana, Tamil Nadu and Karnataka. So the presence increase is very good for AU Small Finance Bank. Back to you.
Okay, thanks a lot for that. So lots of stocks in focus, but let's do a quick recap of our top stocks. With positive news flow, there's Reliance, UltraTech Cement, NTPC, Cipla, MGL and AU Small Finance Bank. While stocks with negative news flow, there's Dr. Reddy's, BPCL, SBI Card and M&M Financial. But we also have, a larger issue at hand, which is the geopolitical crisis, which has... there is no signs of de-escalation at the moment. There's also the US FOMC policy that takes place this week. So Manisha Gupta is joining in to tell us how the commodity markets have been moving ahead of these big events. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, I'll start with the crude oil prices, which have seen a bit of a profit-taking. The prices did decline 3% in the previous week as well, but we still are trading in the positive for the month of October right now. The point being that there is no actual disruption yet to the oil supplies because of the West Asia conflict is something that is keeping the markets quite choppy, but we seem to be holding around the $90 a barrel mark. It is the gold prices which actually have seen a lot of safe haven buying. So we are back above $2,000 an ounce here, with the U.S. government debt crossing $33 trillion now. This is one place that the markets see a lot of comfort in. So high trading volumes and a lot of buying is what we are seeing in precious metals as of today.
Okay. Well, we'll take a very quick commercial break here. Manisha, we'll keep coming back to you and get your update on commodities, but we'll come back. Prakash Devan will be with us in some fundamental stock check. We'll also have Prabal Sen of ICICI Securities for that promise chat on Reliance second quarter earnings, which, of course, were a big beat. We're back in just a bit.